Hey, everybody. Good morning. Welcome to a new episode of Stocks for Breakfast. Thanks so much for joining me today. My name is Pete Renzulli, and we got a lot to talk about today. We're going to talk about China. We're going to talk about whether the energy stocks, which are super obvious, are overdone to the upside. How much room is there left there to go? How much profit potential are there if we're looking to buy those stocks right now? Oil hit over $80 today. We're going to talk about China in two very different ways today. Chinese stocks upgrades, Chinese stocks looking good, massive investment by one of the most famous investors out there, and then real estate nonsense that they have going on, another big default. There's going to be a lot of volatility this week. Stick around. I'll be back in just 1 second. We got a ton of stuff to cover today. There's a lot going on. Okay, everybody. So thank you so much for joining me. As with everything, these videos and live streams are for educational purposes. However, it's up to you to make the final decision, but it's my mission to help you make awesome decisions. So what are we going to start out with today? Well, China. There's no other way to talk about it. Chinese stocks, some good stories. Chinese real estate, not so good stories. Charlie Munger dipped his toe into it, and in a big way, in a really big way. I'm going to talk about that in just 1 second. Let's see. I want to make sure I say hello to a couple of people. Hey, Napoleon, how's it going? Thanks so much. Milky Fade. I don't know what that name means, but you're here every day. I want you to know how much I appreciate it. That's for sure. Simon out in the UK. How's it going? Don, good morning. John A. I'm glad you liked that Mark Minervini webinar. It was really good. Actually, by the way, we're going to start doing our podcast again soon. Actually, this week. So we're going to start. I'll send an announcement out to everybody. Stock Trading Made Easy is the name of the podcast. If you did not happen to do it, we actually came out with a new download this week that you definitely want to catch. Let's see. John Bates, good morning, pal. How's it going? David LeBate, good morning. Love to see you here. Hey, Minvai, how's it going? And who else we got? Ephraim Kiflu. Good morning, Ephraim. How are you today? So we're actually going to start out with an interesting story here. Charlie Munger's firm doubled down on its Alibaba investment. So we're starting to see, as we talk a little bit more this morning about sector rotation and which stocks, and we're actually going to focus on 3 of those sectors today. Chinese stocks are way overdue for a bounce. Everybody knows that there's been that stranglehold by the government, especially against large tech stocks, might be lifting a little bit. So if we kind of dip our toes into looking at the stock-specific Alibaba right there, you can see how we've been working the charts for the better part of almost exactly a year, October last year, where the downtrend just remained in place and we just kept drawing new ones. The interesting thing is the most recent price action. When it starts to go parabolic to the downside and volume starts to pick up, something has changed. And now we're starting to see here where the firm doubled down. And we're going to coincide that with something that we talked about last week, which was the $50 price target, the $50 upgrade put on NEO by Goldman Sachs. Pretty big deal. So again, we keep things as contextual as proper, for lack of a better way of putting that. Look, everything that we do, and by the way, I'm going to actually introduce a book today. We spend a lot of time talking about day trading and swing trading. This book is a little bit more on the fundamental side, but it's kind of a really good textbook on understanding what's going on in the other side of the market, which is reading financial statements, earnings per share, and all that kind of stuff. That point I'm making is Goldman Sachs saw something in the catalyst that changed. There's a driver that changed in NEO, and whether or not it is they believe the Chinese government is lifting the stranglehold that it has, or something is about to change in NEO's numbers. They put a pretty big, at that time, it was almost an $18 higher level than where it is right now. So NEO gets an upgrade by Goldman Sachs. Alibaba and the stock, actually, we could zoom out just a little bit more so you can see that, recently exploded to the upside. You could actually contextually, it's still in the downtrend. There's still bearish order flow, which is something I want to talk about that as well, because we talked about Roku last week, and we need to make sure that everything we talk about is taken in context, because we mentioned Roku in the sense that it was the beginning of new bullish order flow and the first time we started to see smart money starting to dip their toes in, which translated into the same thing for us. Before we start to buy stock, we need to have a game plan of how we plan to buy that stock. So if we're looking at Roku and actually starting to head back to the upside, Same thing with Alibaba. It has to be your initial position, not your full position, because you're fighting months and months and months of selling pressure. We just want a little bit more feedback. It's just smart trading. But getting back into the stories on Alibaba, obviously Charlie Munger doubling up is a big deal, right? Same thing here. Hong Kong stock hit 4-week highs as the bets against antitrust. So antitrust crackdown is seemingly coming to an end, which is a big deal. These stocks are very, very tradable. So just to give you an idea of which of those stocks, obviously Baba is one of those stocks. And again, you want to talk about trader language. It went from 320 down to 140. That's $180 haircut. So if you want to sound great at the barbecue this weekend, when a stock gets crushed like that, professional traders call it a haircut. So Alibaba got a $180 haircut, which is more than a 50% haircut. And now it looks like it's starting to come off the mat. So what does that mean? How does that translate? Well, you know that we talk about order flow and we talk about reading the tape. Working our way over to the weekly chart, Alibaba's weekly chart hit that resistance level, but traded into what is known as a bullish engulfing candle. So for those of you that don't know what a bullish engulfing candle is, it's actually when the current candle, the most recent completed candle, is completely outside the previous one. So it's actually the opposite of an inside candlestick, and it's generally considered a really strong reversal pattern. And if you think about it, and especially if you're looking at the chart of Alibaba here, let me just zoom that out a little bit. The order flow is trending down and it makes new lows. So you got a lot of people that are in there short selling, hitting that bid or selling the stock, expecting it to go lower, but then it reverses. Not only does it reverses for the entire week and it reverses on volume. So now you have two sets of people looking to buy this stock. And we're specifically talking about Alibaba stock right now. You have short sellers who need to get out of the trade because it went down and reversed hard on them and kept going up. You have new news coming out. So now new buyers are looking to get into the stock. So you have two different groups of people buying. So that bullish engulfing candlestick last week was a big deal. But it's only the first time. Remember, we talk about how long has smart money been committing capital. In this case, only a week. It's a good sign. Obviously, that news that we just read, both the possibility of the crackdown on the Chinese stocks, of Chinese technology stocks, that's pretty good news. Charlie Munger dipping his toes in there, segueing over into NIO getting an upgrade. NIO, a Chinese electric vehicle stock. There's a lot going on in their stock market to be taking a look at. So that's one thing. So for me personally, that means I'm dipping my toes in with what might be called an initial position. Jesse Livermore called that his probing position. Friends I used to work with called it a tier 1 entry. So again, to be clear, same thing that we discussed last week in Roku. First time it's reversing, it's a initial position looking for feedback. If it happens to not be the bottom yet, again, we're not bottom fishing because we do have some proof because of the 5 days worth of buying. It's only tier 1. So Baba, I want to rattle off a couple of other ones. We just mentioned NIO. So now we're going to be looking at some Chinese stocks. So NIO, LI, and XPEV. So out of that group of 3 stocks that I just read, to me personally, I find that trading NIO and XPEV I found to be a little bit easier to trade, both from a day trading and a swing trading perspective. So that's where I'm going to be working my way over. A massive announcement this week, or a crazy in a unique, interesting way, by another big name in finance, JP Morgan. Bitcoin, not gold, is the new inflation hedge, says JP Morgan. That is a really big deal. And when you put that into the context that Bitcoin actually had a really big move last week and has not pulled back at all. You can see the weekly chart here now, 3 weeks, where we've completely made up this 10,000 point drop to the point now where we have gone from, let's say, 41,000 to 57,000. That is a big, big move. All right. And you throw this news on top of there, something's cooking over here. Look, I mean, obviously something's been cooking for a while. But the biggest question on Bitcoin and crypto in general is there's too many of them, quite honestly. And I think everybody, even Michael Burry was saying that this weekend. But legitimacy, when you start to have Goldman Sachs talking about building out and expanding their cryptocurrency desk, JP Morgan saying that Bitcoin, not gold, is the new inflation hedge, pretty big deal. speaking about hedging, that's probably going to be a big thing in this market going forward as well. So we're going to kind of segue over into more news about China besides the ones we just mentioned. But there's another default that just happened. Another big developer in China just defaulted, and you can see the size of the default. You're facing a $5 trillion reckoning. So what's the point that I'm making here? It's actually what I talked about in our daily email, which goes out every day, usually no later than 7 o'clock, is there's going to be massive volatility, amazing volatility. You just need to be prepared. Now, here's the thing. If you're just running scans right now and not paying attention to the bigger picture, it's going to be very easy for you to feel like you're going to get whipsawed around. You need to be a day-by-day basis reading the headlines. It's a really important thing. Now, even if you can't interpret the headlines, even if you don't understand what the Chinese default is or the Chinese tech crackdown is, you still need to be aware of this. Is it the right conditions for you to be attacking the market and putting your money in harm's way? Is it perfect or is it confusing? And if it doesn't make sense to you, there's absolutely no reason at all for you to get involved. I can't stress that enough. If it does make sense to you and you're like, okay, earnings season's about to start, which is another big catalyst, then you could start to get in there and trade with conviction. But I just can't stress this enough. And we spent a lot of time talking about this on our swing trading call last night, as well as our 2 coaching calls last week in the boot camp, which is you need to be trading the right scenarios that match your particular point, your particular moment in time in the market. Some people are trading brand new. Some people have been trading for 20 years. You got to know where you are in that picture. And I'm telling you as a friend, if the conditions are hard for you to read, it's completely okay for you to be in cash. It's actually the smart thing to do because we actually start to work our way over into the market. There's another story that we're going to throw onto the market, and we're going to get into the list of sectors and some stock picks in just a minute. But the other story now is Mitch McConnell, and let's just call it Washington. Let's stay away from political sides. I just want to make this a comment about trading and volatility and stuff that we need to be aware of. So let's please not go down that path. This is just about what's going. Let's call it Washington. All right. Obviously, last week's rally in the market was fueled by the conversations about lifting the debt ceiling. Now we have another conversation where in December, that conversation is coming back to the table. This is normally something that just gets approved right away because nobody wants to see this mess happen, but it's on the table right now. Again, keeping completely away from politics. This is just about trading things we need to pay attention to. This is back on the table again. We'll throw in the employment numbers from last week. Let me actually make that a little bit bigger. And you can see that the numbers, I think they were expected to be over 500,000, but they came in at 194. So the hiring was much lower. And if you, I don't know what kind of friends everybody else has, but a lot of my friends are the whole world has changed now with Zoom and everything like that. Nobody wants to go to work anymore. So nobody's even looking for jobs. One of the biggest things I see right now, maybe even you're doing that now with trading, where you have one job and trading's your other job and you're doing everything from home, which by the way, awesome. If you can do that and you're skilled enough to see your consistency, why not? Why not? Just make sure you look into simplified employee pension plans for yourself. You do a SEP and you have a corporation where you're running your profits out of, you need to make sure that if you're abandoning that big corporate job, you need to be putting money aside for the future. And a lot of people who are self-employed use a SEP, which by the way is pretty interesting. You can actually put aside a much, much larger number than you could for a simple IRA if you have a company. I believe it's up to $42,000 per year as a maximum. Think about that compared to what you can put into an IRA. That's if you have a company. I also want to talk about this book. I get a lot of questions about how do I read financial statements and all that kind of stuff. This book is fascinating. I've had it for a long time, and you can see why stocks go up and down. It's a really good book on outlining what matters, PE ratios, all the standard ratios that go into it, earnings per share, how to understand when earnings per share changes and how that affects the stock. Raise your hand if you've ever seen a stock report good earnings and still go down, or report less than good earnings and the stock goes up. That book does a pretty good job of answering that, about why stocks go up and down, why the earnings reports are not exactly as they seem sometime, and how to handle that as far as getting in there and looking at a new opportunity. I think something that we're going to start to work our way into a little bit more in the community is talking about earnings reports and all of that kind of stuff. All right. And actually, John brings up a good point here too about coal prices and cotton prices. By the way, if you haven't traded commodities, they're a whole different ball of wax. So let's take a look at that. What is the cotton symbol? I haven't done this in a long time. Cotton futures. I don't believe that's the right one. It's down here. It's this one. So if we go out to cotton futures, actually, that's pretty interesting. Cotton has exploded 88 to 116. And if I remember my commodity trading properly, I believe that cotton futures are $500 per point. So that's a pretty big move. If you're looking at almost an $18 move, maybe even, actually a $28 move in cotton, 28 times 500, that's a pretty big move. So that's pretty interesting. All right. All right. So we're going to jump into some other ideas. As we mentioned before, Baba is up pretty good. I believe I also saw that Tiger was up pretty good, up 4%, another fintech stock in China. So that's going to be pretty interesting to watch. Let's just take a look at Baidu to see if anything's going on over there. Baidu also up 2%, up $3. So they're getting a little bit of a edge. We're going to work our way over into looking at some of the other stocks, which is the stocks that have been on fire, specifically the sector rotation that we do every day, which is here. And we're going to focus on energy stocks. And you can see across the board, they're having just an absolutely incredible month. But now the question is, are they good ideas? John actually mentioned before coal. So we're going to look at financial. We're going to look at industrials. We're going to look at those two because they seem to be a little bit of better opportunity. Basic materials is kind of working its way up the list, but we don't have any opportunities in basic materials yet. However, again, this is something that we mentioned in our recent coaching call, which is understanding that you need to do this kind of work every single day. Be on top of sector rotation. It's literally the first thing I give our community as soon as the market closes, so we can get in there and start seeing and tracking where the order flow is running into, and then determining if it's now or if it's soon. So basic material stocks right now are in our tracking journal, which means they're perking up, but not tradable opportunities yet. So you got to watch them going up the list. But we're working over into energy, financials, and industrials, which do have some opportunities and even have some breakouts right now. So I want to give that clarity, because even if something's not tradable right now, if you're starting to see order flow flowing into that, no pun intended, order flow flowing into those stocks and into that sector, you need to track it. If you're a regular viewer of the channel, which by the way, I hope you are, smash that like button and hit the subscribe button if you're finding this stuff valuable. I really hope you do. We tracked energy before it started to rally. And we were looking at that the same way we're looking at basic materials right now. So it's going to be fun for us to do that together, to say, wow, in the middle of October, in the beginning of October, we were talking about basic materials. And then we're on top of that as we start to track the breakouts in those downtrends before it starts to hit the headlines, which, by the way, pretty interesting this weekend. I saw an article, I think it was on Market Watch, about how high can energy stocks go. All right, that's kind of like the kiss of death for an up move. When you start to see it hit the headlines, all we need to see now is on the cover of Newsweek, and the big move is done. We'll see. We'll see how much room it has to go. So anyway, we're going to hop into those stocks. We're going to take a look at financial stocks that we can take a look at today, industrial stocks, and we're going to point out some of the energy stocks that might still have a little bit of room to go, and some of them that kind of hit a wall. All right, so I'm going to actually pull on over so we can see here. Let's see. Can you take a look at SKLZ? SKLZ has kind of been out of play for a while, as have a lot of these SPAC stocks. They really haven't been. Yeah, there's nothing to do here at all. You can see that the order flow is still pointing to the downside. I don't see anything to do here. It's not well bid on the daily chart. It's not well bid on the weekly chart. Not well bid on the monthly chart either. So for me personally, I don't see anything to do here at all. One thing we did talk about last week was Tilray stock. The earnings were not as bad as the non-reaction that we saw. So we're actually going to start keeping an eye on Tilray to see if this longer-term trend finally starts to see some buying. The year-over-year numbers were not horrible. And if you dive a little bit deeper into the percentage gain, pretty interesting. Another one to keep an eye on. We did a little bit of a breakdown on PLTR in our swing trade coaching call last night. This stock is very polarizing, but you can see, you can see how hard we work in this stock over the last year, basically, maybe even the last 9 months. This stock it keeps getting more press. I don't know if it's people are in love with the technology. I don't know if people are in love with the CEO, but it's not really one of the best stocks to swing trade or day trade, quite honestly. I personally think this stock is more of an investment. It just doesn't hold the bid with consistency, and the stories are kind of all over the place. So I did a lot of research on this stock over the weekend. I can understand why people are in love with it, but for me personally, it would be more a longer term play than anything that I'd be looking to swing trade. It just doesn't hold the bid. It doesn't have institutional attention, and from a business perspective, just to give you, like, we talk about what are the driving forces that would change the bigger picture on a stock right now? And I'll just give you from an entrepreneurial perspective. A lot of PLTR's revenue comes from a few really big clients. And if you think about if you own a business, would you rather have 1,000 clients that come in on a regular basis that get you up to that number? Or would you rather have 1 or 2 that get you up to that number? There's trade-offs, and PLTR has a lot of the revenue just really jammed in with just a couple of big clients, but only a few of them. That puts you in a really precarious situation if you lose one of those clients. And I think that's the reason, that and the amount of shares that are outstanding. So that would be the catalyst where I'd start to look to see if they could come out in a little bit more direction where they're not so reliant on just a couple of people. And it just kind of makes sense, really, quite honestly. Let's see. PLTR is more new tech and is one of the best ARK investments of Kathy Wood. Yep. Look, I don't think anybody disagrees with that. I'm talking more about the business model and where they're getting it. So, Rajesh, I don't disagree with that. As a matter of fact, I agree with that. But we're talking about more the fragility of the revenue that they're reporting. That's the big thing that I'm keeping an eye on. All right. Space, I don't see anything to do there either. Space is still pointing to the downside. I want to get into the other stocks because I want to, there's nothing to do at all here in space. Space needs to wake up first. I don't see any volume. I don't see it well bid. For me personally right now, I'd love to trade space, but I'm not trading it at all right now. There's no order flow at all there. So that's pretty interesting, right? It's a different perspective on it. If you have 1 or 2 clients, the upside of that is you're pretty much guaranteed to get paid. I mean, especially if it's a government contract. The downside is you lose those contracts, dramatically changes what you're doing. Okay, so we're going to head on over. I'm going to start taking a look at some of the energy stocks that we were just mentioning. Some of them are still in play. Some of them have kind of reached levels of resistance. So Hess, which had one of the bigger days on Friday, hit a wall at 90, 91. You can see it's actually opening up above there again. So again, we want to start out with what the strongest sector is, and Hess just plowed through that level after, I believe, having the biggest percentage day on Friday. So I'm going to give you some ideas in this sector. PSX meeting a little bit of resistance here, but has some room to go as well. FANG, if you didn't see it, had the upgrade last week. I'm giving you a list because a lot of people don't have the entire list of ideas. So I just want to show you some other ones. DVN, as somebody just mentioned. Who is that? Myers just mentioned DVN. So good job on that, Myers. What I like about this is Friday was only the first day coming out of this pause, which I like quite a bit. So it'd be easy to say it's a little bit overbought, but it's really not. It actually paused here for 2 days before taking off again. So like that, EOG is in my radar as well. Again, look at how we work the list. This is what we're talking about. You need to do this every single day. All right, let me just hop in here. Do you have an idea why Riot hasn't been taking advantage of the crypto, just like Mara or MSTR? I do not have any idea. All I know is that I am taking advantage of Mara. And you know what? That's actually a really big thing. That's a good point because we normally trade Mara and we normally trade Riot. And thank you to Aldo, who's our crypto expert inside the community. But here's the thing. You can see the chart here in Mara and you can see the chart here in Riot. Riot's not participating, right? So now the inclination, the natural inclination from a rookie would be, well, I'm going to go buy Riot because when it starts to rally, I'm going to have a much better price, right? No. That's completely ass backwards. You want to be trading the one that is doing what you expect it to do and then piggyback on that. Why? We'll figure out why later. Right now, all I care about is Mara's going up and Riot's not. So I'm not even looking at Riot right now. I am only looking at Mara because Mara is doing exactly what I wanted to do. As a matter of fact, is following Bitcoin pretty cleanly. So there is a disconnect there. They're not in sync at all. So I'm just focusing on Riot. One of the other ones, if you want to take a look at it, BTBT has been one that it's some of the members, because it's a little bit of a less expensive stock, around $11, which again, Mara's not really that expensive either, but some people like to get in to get a little bit of size. Okay, so I want to hop on over. I want to finish up on some of those other stocks that we just mentioned. COP, again, we're sticking with the energy sector. First day, have a nice breakout. VLO, and that's going to be the kind of one that's going to wind down the energy stocks. The only other one that I think is pretty interesting is MPC. MPC is actually resting right at a breakout level, so that's going to be pretty interesting to watch today as well. So working our way down into the list here, we're actually going to take a look at financial and then industrial stocks, okay, just to give everybody some full clarity on what we're going to be watching. So believe it or not, Mara is actually considered a financial stock. ICE, if you didn't watch ICE last week, that's a pretty interesting one. It actually had almost a 12% rally last week, exploded through this. Now, the reason that we talk about it, remember, when we build our list of stocks and we run our scans, there has to be some minimum criteria. And if we pop in a key moving average that a lot of people watch, which is the 50-period moving average, prior to this explosion, this is actually where ICE was prior to that. But this is why you watch the tape every day. This is why you have certain criteria. ICE woke up, exploded through these levels, probably a little bit overbought right now. This 12% move in 4 days is as big as the previous 12% move in the last year. That happened over weeks. So ICE today, for me, in this, again, financial sector, I'm going to be looking to day trade it, but I want to pause or a little bit of a pullback before I start to swing trade it a little bit more. Okay. All right. So sticking with this area, LC perked up a little bit last week. You can see that closing on the high. APO had a nice breakout last week again. And you know what's super important here too, and probably one of the simplest scans that you can run in a heartbeat. How did the market close today? So let's say, for example, you're looking at the market on Friday, closing on the lows. Run a scan of which stocks closed the highest off the opening price the same day, and they have quick relative strength. So if you're looking at APO right now, not only did it break out, but it also closed near the highs when the market closed near the lows. So some pretty good relative strength there. All right. The last one I want to talk about here, two of them actually. STT had a good week, looking for follow through, and Schwab is actually sitting right on a breakout level. And we want to shift our way over here. Number 4, industrial stocks. Again, we're setting up ideas for the week. Let me actually get that off the screen. And last but not least, we're going to work over into UNP. Now, some of these are clearly the first sign of order flow. So if we're working this list and seeing this move to the downside, this is the first time it's moved. The stock hasn't paused, but that was an amazing, amazing 5 days of trading. So we're looking for a new move here. Probably going to pause here. I'm giving you a list of ideas, right? The next one we're looking at is PCAR. Okay, you can see how we're working the PCAR chart. Actually went down, traded into a box, waiting for this to get above 85. So it's a little bit of a lower opening. BLDR finally did break out. RTX. And last but not least, not really the best one of the board, but you can see Boeing, which we keep waiting to get over 228. So it's actually down around that 226 level now. So what we just did is we built a list of ideas for this week based on some of them having clear longer-term order flow, such as the energy sector. Financial starting to perk up. We didn't mention JP Morgan or American Express as well. 2 other stocks you want to have on your radar this week. We're watching the industrial stocks and the basic material stocks starting to bottom out and reverse. We just talked about 2 breakouts in the industrial sector, RTX and BLDR specifically, and that's really what's at the top of our list. We've been talking about some of the larger cap tech stocks, which really have not been in play other than Oracle, which had a big breakout on Friday that we participated in as well. So Microsoft really hasn't done that much. Facebook is still trying to put a spin control on the whistleblower last week. So again, shifting it all the way back to what we started today about, there's going to be some interesting plays in Chinese stocks this week if the early order flow that we're seeing right now starts to catch a bid and starts to head back up to the other side. So, you know what? I do want to point out a couple of ideas that we just called out today. And some of these stocks were going straight down. It's very, very tempting to want to buy a stock that got hit pretty hard because it's at a lower price right now. I'm telling you, the easiest way, and I don't say easy very lightly, the easiest way to put yourself in a good position is to at least say to yourself, I see there's order flow. At least you're building an argument on something. If you're buying a stock that's still continuing to go down, you're the first pioneer and you're the one that's going to have arrows in your back. Let somebody else with deep pockets of smart money at least start to push that stock over a couple of days, maybe even over a week. And now this week, you can start to look for those stocks to go well bid. So you have a little bit more feedback, so you can have a little bit more conviction at allocating capital. But remember, big thing that we're talking about, whether it's Alibaba stock or any of these stocks, like we mentioned before, SKLZ or a few of the other ones, before you look to buy those stocks, make sure you understand how big your initial position should be based on the quality of the idea, which is the order flow, and tape reading, how far has the stock gone recently. So I'll give you another example of one that is a tech stock that's been performing pretty good, which is Net. So Net is obviously a long. So if we have that quote of pick a side, then pick a spot, obviously Net looks great, but now the stock has gone up 1, 2, 3, 4, 5, 6 days in a row. So if reading the order flow, it's clearly bullish. Reading the tape, it's a little bit too late to initiate a new swing trade. So in this case here, I'll absolutely be looking to day trade it, but I wouldn't be looking to put on a new swing trade. I'd actually love to see it pause and then pull back down into that 132 area where I'd be looking to get long. I want to make sure I say hello to Jason Miller. Jason, always a pleasure to see you. Good morning, Domingo. Home Depot and Lowe perked up last week as well. Let's finish up on those two. Home Depot actually traded into a bullish U-turn on Friday. We've got to get above this 340 level. And Lowe. So actually, you know what? Both of them near breakouts level. So Home Depot at 340 and Lowe's at 210. All right. Listen, I want to thank everybody for joining me here today, but I have to head over to our boot camp game plan meeting for the day. If you found these videos helpful, please do me a favor, smash that like button. I'd really appreciate it. I want to point out this book. Again, we were talking about that before, why stocks go up and down. If fundamental analysis is something that's new to you, it's a big book. It's well over 250, maybe 300 pages, and it could read like a textbook. But look, the bottom line is you're here. You want to have that unlimited upside. Make that little bit of an investment in yourself. Read 5 or 10 pages a day. Use a highlighting marker, and then go back and read them again. That's how you start to get smarter every day. All right. Thank you so much for joining me here, everybody. I have to head over to our boot camp meeting. I really appreciate it. Have an awesome, awesome day. If you have any questions, leave a comment below the video. If you want to learn about the boot camp, click that link below the video as well. Have an awesome day, everybody. I'll speak to you soon. Franklin, Elliot, Yami, Rowan, have an awesome day, everybody. I'll speak to you soon.